What's going on, everybody? Yashua Suarez with Edge Realty here, and this is another episode of the Edge Realty Podcast. Today, in this day and age, we're always thinking about, is this time a good time to buy? Is this a right decision for me? Do I have the ability to get any type of mortgage loan approved for myself? And also for our agents to be able to know, who can we help? How can we help them more? And for something like this, we got to bring in some big guns. With these big guns comes a lot of knowledge and experience. And today I brought the one and only, one of the biggest producers in the lender mortgage industry right now in our area, in the state of Arkansas, Mr. Blake Peterson.
Hey, man.
What's going on, brother? How are you, man?
Good to see you, man.
Appreciate you being here, buddy.
Yeah, absolutely.
Dude, so tell us a little bit about yourself, man. How did you get into the home mortgage industry?
Man, it goes back when I was in high school. I got into sales. I kind of seen where that, I was chasing that money basically. And so I got into sales and, just from a young age, I went through college, majored in finance. And, I was about a year and a half from getting my degree and more or less got an opportunity to go into commercial lending. So I actually started out in commercial lending for the first 2 years-ish of my career. And so kind of backwards, usually people go work at a bank for years and work their way into kind of commercial lending. So I worked with a company called Textron Financial. So Textron's just a huge conglomerate. They own like Easy Go golf cart, Bell Helicopter. Yeah. And so I started with Textron, and of course Textron's huge. They're in the money making business. And it was about 2 years in, they kind of pulled the rug out from underneath of us. They sold that division out. I had an opportunity to actually go to East Hartford, Connecticut. And just at that time of my life, I wasn't wanting to move to the northeast part of the country. Right?
Hey, that's my old stomping grounds.
Yeah. And so, I was a Southern boy and more or less I made the decision to get into mortgage lending. So I did. I moved to Dallas for a few years, came back to Arkansas and had a long tenure with Bank of England Mortgage, and then ultimately joined Flat Branch about 6 years ago now.
Nice, man. So what's been keeping you in the industry?
Man, it's, what's crazy is how, I knew I wanted to be in sales, but, I always had that desire to, help people. And more or less my job is really just kind of figuring out people's problems financially and getting them into a house. That's mainly what I specialize in, is kind of not just, hey, yeah, you can get a home loan or you can't get a home loan. Anytime someone's not there, it's never no, can't help you, have a nice life, see you later type thing. Yeah. Which generally happens. And I just wanted to go the opposite way with it and say, all right, look, if we're not even meeting the base parameters to be approved for a loan, I know they're not going to go anywhere else and get a yes. That's why I joined Flat Branch. They don't have all the red tape. They don't have the overlays. And more or less I can actually dissect their problem and go, okay, we're maybe a month off, we're maybe a 2 months, 3 months. And it's not a guessing game. I mean, we go in there and I dissect their credit. I run extremely detailed analyzers that are connected with the lending bureaus with the most up-to-date scoring algorithms. And, you just dissect their problem. And if you can't get it there on a rapid rescore, then it's projecting 1 month, 2 months, 3 months out, seeing, okay, when are they going to be there? And more than anything, I think for people, it gives them the light at the end of the tunnel. It's kind of like losing weight, right? Yeah. If you could literally take a picture of somebody and show them exactly what they would look like in 3 months, like literally how they would look, and they're like, wow, I could look like that, right? Ooh. And so you're really just kind of giving them that bird's eye view of the future with their credit. And it really does. It motivates them, because it's hard to just say, hey, call back in a year. They don't really know what's going to be going on in that year. Mm-hmm. And a lot of these people, they understand credit in the sense of, oh, if I pay my bills on time, I'll be there. There's so much more than that, and kind of teaching them how the algorithms read, what are common myths with credit, just little things like that. But that's probably what, has mainly kept me in it. It really enjoying the process and helping people. It's really satisfying, So it really is.
And that's amazing, because there's so many times we can't tell you like how we run into situations where just like that, people are going to try to get a service, find out that they can't be approved, but then are just kind of left to the whims of their own will or their own knowledge, which a lot of people are just lack. What type of success have you found just from being able to help those type of individuals instead of just saying no, but saying, okay, we can't right now. This is how we get to where you want to be.
Man, if I had to put a number on it, I would say that probably at least 85% of the people I sit down with are calling me back either a month, 2 months, 3 months, and we've got them there. The thing is, it's so funny to me. Like people will be like, dude, you're so smart, which I don't think, I'm smart in finance, but then I look at a guy that's overhauling an engine and I don't know anything about,
Right.
and I'm like, dang, that dude's smart.
You're a specialist.
I'm an idiot, Again, I think everybody's smart in their own ways. Everybody kind of goes down that life path and specializes in something, and we all need each other, right?
Absolutely.
If you need an electrician, you don't call a plumber, you call an electrician, and that's the thing too, I've never, I don't use the cheapest guy. I use the guy that I feel comfortable with and that I feel that knows his stuff, and cares enough to spend that time with me, being just another random Joe, right?
Absolutely.
But yeah, it's a really high approval rate when you're never denying anybody. I always say no one's ever denied. Okay, you might not be right then and there, but hey, in 3 months we're approved, right?
That's right.
And they just need that light at the end of the tunnel. A lot of people go through things. I tell people when I'm going over their credit, not that I don't care, because a lot of times they'll want to go into a long story on how a collection hit, and we're trying to unpack quite a few things. And I tell them, look, I don't judge. It doesn't matter to me, what happened. I truly care, but people go through divorces, man. People go through loss of jobs. People maybe have a child that dies, right? And they're depressed and they crawl up in a shell. And the last thing they're worried about is a $10 minimum payment on a credit card. And with that said, it's, what matters more than anything is, okay, that's all great, but what do we care about now moving forward, right? What are we doing now moving forward that's going to reach your goal, right?
Absolutely, man. And that's the best way, in my opinion, to have, unfortunately and I've heard stories from other buyers and other clients that have had that same situation, and they go into, trying to figure out, okay, well, I know I need to talk to a realtor. I know I need to talk to a mortgage lender. Okay, let's just reach out and see what we can get approved of. And then once they get that denial or that not being able to get approved, it seems as though that individual, that mortgage lender or that real estate agent are fear. Just like, they just let them go.
Yeah, no, it's definitely fear. I mean, they're getting their whole financial situation microanalyzed.
Yeah.
And so, that's why I always say that first minute of my phone call is the absolute most important, because that wall's built up high. They're scared to death. You're about to go pull their credit and look at their situation. He's going to judge me. He's going to tell me that I'm no good. And
it's a sensitive subject.
And that's when I tell them, like, look, I don't care if you're the worst credit score I've ever pulled. Okay, cool. What are we doing now moving forward to get you there?
Absolutely.
So yeah, it's definitely gratifying. There's no doubt.
That's awesome, brother.
Yeah.
That's awesome. Mm-hmm. So, all right. So I know for firsthand that you put in way more hours than the average lender, and reason being is because we share the same shopping area right here. So we're in the same parking lot, and so every time I try to look at myself. I'm like, all right, I was at the office till like 5:30, and I'm like, that was a really good day. I end up leaving, and whose truck is still outside of his office? This man's truck is out there all the time, and
we smile about it. My wife, she's not usually too happy about it, but she's happy when the bills are paid.
I was gonna say, there's a give and take there, absolutely. But so you're known as one of the hardest working lenders around. What gives you that type of motivation to put in that type of time?
Yeah, I mean, first off, off the top of my head, 6 kids. That'll give you the motivation, right?
For sure.
No, I mean I think it's a lot of it's hereditary and how you were raised. I mean, there's a lot of those factors that play into it. My dad, he was blue collar railroader. There was 5 of us, and he worked a ton of overtime. My mom was, for the most part of my life, was a true stay-at-home mom. Mm-hmm. Just more, your traditional family roles, I guess you would say. My grandfather, there was 8 kids on my dad's side. He worked 3 different jobs. But look, I agree to take it on and handle the volume, right? And when you have loans going, it doesn't stop. You can't tell somebody that has their house packed up to a ceiling, right? And they're supposed to hit this closing date. We missed that closing date. It's not just them missing their closing date. It's them costing them a lot of money. You've got sellers on the other side that they've got plans where they're buying, and it just messes up the whole chain. And I can't leave at 5 o'clock and just be like, well, hey, I wanted to go home a little early, so sorry, we're not closing, know? And so, I have agreed to take that volume on, and I take it seriously. So, that's the one thing I'll tell you this much. When we get down, if we have a closing date, and if we're not hitting that closing date, it better not be on me or my team.
Gotcha,
It better
yeah.
be that the sellers are holding it up, or something that we can absolutely not control.
Yeah, yeah.
Maybe there's a repair on the house, something like that. But yeah, it's just that drive, man. You just get up every day and put one foot in front of the other, and and I truly believe in handling what you have for that day. Now if somebody can do that and leave it at 3 o'clock, great. It just so happens I can't. Plus I'm a little ADD. So,
Yeah.
I take all these side rows all day with my business.
Yeah.
When I can probably just take a straight shot to it, and then I finally get back to the main road. But I eventually get to the end of the road. And,
Man, as an entrepreneur, I think we end up having all those hats, right? We
Yeah,
end up
yeah.
having, we wear all these hats because we're trying to make our business successful and drive it to the next level, right?
Mhm.
So, I mean, how do you find the ability to delegate certain things? Because I know you have an assistant now, and you've also brought and within the last few years you brought your wife on the team as well too.
She's been day
from
one.
day
Yeah.
one.
Mhm.
Excuse me,
Mhm.
from day one.
Yeah.
So you guys kind of came in together.
Mhm.
But like, how do you find the organization and the process and the systems to be able to kind of have that ship working and still moving at the same time?
Man, I can't take credit for that. I can't. It's my wife. She my assistant. She kind of keeps me in line at the office, but my wife's probably like the overseer of our operation. And I've learned to where when she kind of barks, just roll with it. And a lot of husbands, wife, they can't work together at all.
I was gonna say that's
But I
yeah.
also know my role. I know that I'm that grinder. This is what I'm good at, And what's funny, even when we got together, it was more of, kind of looking at it from an outside scope, going, all right, what are you good at? What am I not good at? What are you not good at?
Yeah.
And then, we really tried for her to take those roles and me to take the roles that I'm good at. I feel like if you're both trying to work on the same thing and you're both hitting the same angle, you're not getting anywhere. You know what I mean?
Yeah.
But yeah, she does a great job. Like, I honestly, when I get in, I'm on the phone from the time I walk in that office, and I can't even take bathroom breaks half the time. I'm not kidding. It's that crazy, because I'll be on the phone and I'll have like 25 texts stacked up. So then I get off that, and it's almost like, I don't even know where to turn. So my assistant on a daily basis does a good job of going, all right, you need to turn here, you need to turn there, because they know what the hot things are going. And then my wife kind of takes ultimate control from the top. But they watch over all my emails, my instant message board. I mean, it's just, if I've got a meeting or, we got to jump on a Zoom call. And so it definitely, it takes a well-oiled machine, especially with the volume that we do and just having 3 people.
Yeah.
Because my wife's my processor. She's processing loans and getting them all down to closing once I've passed them on to her.
Mm-hmm.
And I'm really trying to snowplow that front end of the process.
Yeah.
Just keep it moving.
How did you guys figure out as far as the roles when it came to starting the business together? Did you guys already have that already in thought? Like, you guys have already spoken about that? Was that just a natural, innate?
Well, so, not to kind of go back, but when I left Bank of England, I went with a company called Caliber Home Loans, and I got them going here for Central Arkansas. And let me backtrack a little bit more. Well, no, actually, after Caliber, I did go to Wells Fargo for a little bit.
Okay.
And that's how I met my wife. She was my processor, actually. I went through a divorce, and so obviously I knew she was a really good processor. Not to brag on her, but I want to brag on her. She, with Wells Fargo, they have, I mean, at that time, they had, I want to say 600, 700 processors nationwide. That's a lot of, or no, yeah, 700 processors, I think. But, they grade them on everything, efficiency, how long it takes from conditions to come out until they make that phone call to the borrower and gathering. I mean, they get literally graded on every little spectrum, and she was consistently ranked in the top 5. So she's a very, very efficient. She's just, I'm ADD and kind of zone out, and she's that just bam, 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 bam.
Stay with me. Stay on track. Stay on track.
Yeah, there's times where she does a good job of not, like when I kind of start getting out there, she does a good job of kind of bringing me back around, but not being, hateful about it, you
Yeah.
know, like get your head out of your butt, you know?
Yeah. Man, that's awesome. Because like just like you said, like there's so many couples out there that know that like they just say, you know what, I know I cannot work with my spouse or I can't work with my
Yeah.
significant other.
Yeah.
It's just not going to happen. We already spend all day together outside of work. We can't spend it together all the
Yeah.
time inside of work together.
I think a
all
lot of
too.
that's caused too from like, oh, I can do this better than you can. You know, you really got to truly find out like what you're good at, what you're not. You know,
Yeah.
and that's anything when you're scaling a business, realizing, okay, I'm going to let this person take control of my baby in this avenue because you realize they are better than you. You've got to let go of your ego for sure.
That's
You
a
know what I mean?
huge
You
thing.
have
I
to
mean,
let go of
I
your
think
ego.
it's that plus the fact that we want to micromanage everything,
Absolutely.
and it's that control. Like I guess
Yeah.
the ego goes into that, which
Correct.
wanting to have control
Yeah.
of something.
But there's certain things we will not let control.
I was gonna say, yeah, it's tough. Like there are, like we were just talking about before we started recording, is that there's like there's a rule that 80% of items that you feel that honestly could just be delegated to somebody else, or it could be outsourced in one way, shape, or form.
Oh,
But
absolutely.
there's that 20%, and that's something we have to figure out as
Correct.
individuals.
Yeah.
Is what is that 20% that's going to take us
Yeah.
to that next level?
Well, and even when you do that and you're scaling a business, man, it's, you're constantly just finding ways to improve the machine, right?
Mm-hmm.
And I think that's why, just kind of staying on the same page, you know, just kind of sitting down and going, okay, there's times where, people start getting habitual. For example, I've done this for 23 years and I'll have a file and, there's a certain flow with it, right? And there's times where like I do one file, I forget one little step, and then guess what? The next file I'm doing that next file. Next thing you know, my wife's calling me going, "Hey, you haven't been doing this on like the last 3 files." Because again, you can get out of even when you think, you've got it whipped and you know everything there is to know about what you're doing, you can get off track. And that's like relationships, life, everything. The key is, I think, just really taking a step back and regrouping and saying, all right, where are we off track? Where did we get off track? And let's get back on track,
So you were saying like a big thing, that something that you can't let go of when it comes to your business and the way you run and your processes is that one-on-one connection that you have with
Absolutely.
people.
Yeah. I will always be that main call, that the initial call to the borrower and kind of that early stages.
Why is that though?
Just because, a lot of, if let's just take Flat Branch, all of us in the say top 10 of production, just about every one of them are, they delegate that out. They have like a pre-approval specialist. They have a this specialist or that specialist. And more or less, the loan officer's just kind of overseeing it. We've got some guys that haven't even turned their computer on hardly, or looked into Encompass, which is the software that we work loans into. And again, everybody has their own model. The thing is, several things work. It's just what works for you, right?
Mm-hmm.
So I'm not knocking that by any means, but like we have one guy that literally all he does is go out and meet with realtors. That's it. Every day he gets up and he goes out and makes a few calls, and then he's back at the house. And that's great. It works for him. My business, but with that said, you're relying on a lot of marketing. So he has a pretty large marketing budget,
Mm-hmm.
and I'm just that old school, like word of mouth. I don't really, honestly, the only time I market's when I'm kind of backed in a corner, like, "Hey, Blake, will you sponsor this?" I'm like, "Yeah, sure, why not?" Right? Because I do have some marketing funds each year, and I, just kind of delegate it that way. But it's just really important to me that I make that call. That I want them to feel the love, dude.
Yeah.
Like I said, they're scared to death, man. I don't care if they bought 5 houses; they're scared to death to have that looked at and their financials. And you just got to kind of bring that guard down and let them know, look, man, we got you, dude. It's just, there's nothing to it. This is what we're going to do. And you just map it out for them, man.
See, that's amazing, because I think, and I say this a lot, and people on here have probably heard me say it a whole bunch of times, but as real estate agents and lenders, I think sometimes we do get numb when it comes to being empathetic with our clients and the people that we help and we service, because we do it every single day.
Correct.
It's something that it comes into like that repetition, like you said, it's a habitual thing.
Yeah.
So how do you keep yourself from getting into that?
Man, just like anything in life, okay, so you're making great money now. The great money becomes the norm, right?
Mm-hmm.
When it becomes like, if you're used to not having food at all, when you get food, you're just so excited and you're over the moon. But then if you're just given mass amounts of food every day, you get to that point where it's just, oh, this is normal, right? And I really think you need to take that time every once in a while to pinch yourself and go, man, wow, But I will tell you this, what keeps me probably motivated more than anything is fear of failure,
Okay.
like what's the best way to put this? It, it scares me way more to fail than what, uh, winning feels good. Does that make sense?
Yeah. Yeah.
What
Okay. Yeah.
success feels good.
Yes.
Like
We
because I've been down both roads.
we
You know what I
spoke
mean?
about this
The
actually.
market crashed, and we were pretty SOL, right?
Yeah.
At,
Yeah.
at that time, and the thing is, I won't forget that feeling. And the thing is, I don't care what you're doing in life, man. It can crash and burn. You just gotta appreciate it. And every day when I wake up, it's not, oh my God, I've got this many deals going, or man, I just closed $7 million for the month, or just closed $70 million for the year. It's, oh my God, what if next month I don't close anything? What if the month after that I don't close it? Oh my gosh, it's all going to crash and burn. Like, it's just constantly playing this loop in my head. When I go to bed at night, it's like, oh my God, what if this happened, that happened, then my 6 kids and my wife, and it scares me. And so that's really what motivates me more than anything.
Man, I can, the fear
The fear
is
of
definitely,
failure, dude.
absolutely.
Yeah.
Well, do you ever have, all right, so we spoke about something very similar on the podcast before, about when you're looking back and seeing things that, you have not accomplished or that you failed at, and you could have done a billion other amazing things. But why is it that sometimes it seems as though the failures stand out way more than any of the wins?
Man,
and do you have that problem?
Well, oh yeah, I think everybody hits snags, man, whether it's business, personal. I just, I've been down both roads, man. And it's, again, kind of like I said, when you have something, financially, it's been great for several years, right? Most of my life. But again, I've been down those channels of market crash and, going through a divorce, for example. But, if we're talking more business, it's, it just stings so much worse than that success feels good.
Yeah.
Because again, a lot of that stuff becomes the norm. But man, when you're going through the dumps, it's like every day is just like, man, this is bad. You know? And it just feels like it lasts so much longer. You know what I mean?
Yes.
I mean, you can go through a great year and then have just one terrible 4 weeks in a row month, and it's like, man, that was brutal,
Yeah. You
Just,
almost forget about everything that you've succeeded in that whole year.
It's hard to put into words, but the success to me doesn't feel as good as what failure feels as bad to fail. It just feels so much worse. Man.
Yeah, man, that's I can absolutely.
But I truly also, the other 50% of that is just truly enjoying helping people, man. I love dissecting their problem, and because that's really all it's just a problem solver. It's like, all right, let me take your problem and let me kind of fix it for you, just like a technician. I'm just a financial technician, I guess you would say. And I really do enjoy it. I forgot who I was talking to the other day. I think it was a realtor, and we were actually talking about that. And I said, it's nice getting a $500,000 loan, and it's cookie cutter and it flies right through. Of course, you're paid a lot more on that too, right? Mm-hmm. But sometimes I get more gratification out of taking that first time home buyer buying their first home in that 150, 175 range. I get sometimes more gratification getting that figured out than someone that's just pretty cookie cutter that kind of knows they're already good to go.
And it almost feels like you earned it. Not
absolutely.
that you don't earn it in the beginning hand, but you have to work a little bit different, a little bit harder, and more tactful to earn that one.
Well, and it's like teachers, they don't get into the industry to become rich, They truly care about helping those kids out and making impressions on people and going into the future, with just our future generation, man.
Yeah, absolutely. So I know we can sit here and talk about mindset all day, every day, because that's honestly from an entrepreneur standpoint, it's one of my favorite things to talk about, the psychology behind it. But let's get into some of the stuff that we want to get into, which is on the mortgage side, and helping out our clients and giving them some good information. What are some trends that you're kind of seeing right now in our market, say here in Central Arkansas for 2025, that differ from 2024?
If you go back even a little bit further than that, our economy runs in cycles. there's certain monies that are pumped in the economy. Let's go COVID, the stimulus package came in. Of course, we obviously know now it overstimulated, right? But, when our economy, if you take our overall economy, our economy is not great with money, right? Our economy is either just everybody's spending left and right, or they're being, they're like a squirrel, harvesting nuts and stashing them up.
Yeah.
And when there's more money in the economy, people want to spend it. They're going to buy more cars and houses and do what have you. So the trend you've kind of seen is more, people having no problem. I can put 5-10% down. No problem. I have my closing cost. And the trends are now is as it's kind of getting tighter now, and until we start seeing some rate breaks, people are being a little bit more conservative. That doesn't mean people aren't buying. People are always going to buy homes. You have to have homes, right? Yeah. It's just more, I'm seeing way more of, just people needing help financially, whether it's down payment assistance or 100% financing. And a lot of people sit and hear things like, oh man, I heard they put 200 grand down or 100 grand down. I mean, let's be realistic. People don't walk around with $100,000 in their savings account. That's just not norm.
Right.
Generally speaking, when you get people putting chunks down, it's generally the sale of a house, or maybe they got lucky and grandma just passed them 100 grand, right? Which is really rare, but, more than anything, I see the market trends. Matter of fact, we just got off a Zoom call right before I joined you here. And there's just more creative ways and some products coming down the line for helping those type buyers out.
Okay.
I mean, there's a loan for everybody. And, a lot of people say, well, what's a good loan? What's a bad loan? Well, there's no bad loan. You just have to get the right fit for the right person.
Yeah.
You like me, it doesn't matter to me whether I write down payment assistance or USDA, conventional, FHA, VA, it really doesn't. At the end of the day, it's a loan. I'm well versed in all of them. When I dissect their problem, it's okay, what fits them the best? What's the best fit for them financially?
Yeah. I think that's something that a lot of people don't really realize all the time, is that there are options of how to use these loans, instead of just thinking that it's FHA 3.5% down, if it's conventional 20% down, if it's VA, if it's RD. I think there's ways within those loans to be able to maximize the efforts and maximize the investment for our clients.
Absolutely.
I think a lot of people don't realize that.
Yeah. Oh no, it's definitely, for example, you don't take a 660 credit score borrower and trying to railroad them into conventional. At that point, they're better off going, say, FHA, right? Because conventional likes that cream of the crop scores, the 5% or more down. They're going to end up getting hammered more on the private mortgage insurance. They're going to get a higher rate. They're better off just taking that FHA loan. Because, a lot of people too, sometimes I had a borrower the other day that they were normally a conventional borrower. They just had a recent mishap with a collection. So she was down around the 660 credit score. And she was just so used to going conventional. And the lender she was with was trying to railroad it conventional, which was giving them a rough deal. And she kind of sensed that. And then she ended up getting referred to me. And I said to her, I said, look, I get it. You're used to going conventional, and I said, we really need to look at FHA, and let me kind of explain the differences and what have you. And she kind of thought like FHA was more of a government hand-me-out type loan.
Yeah.
And I said, it means nothing other than the federal government backs the loan. That's it. It's just government insured. So in their case, I was like, look, let's put it on FHA. This is how much it's going to save you going that route. And then we'll refinance it over to conventional when you have higher scores and these rates bust down, so
that's
just
awesome.
putting them in the right fit is the key.
Exactly. And a lot of that stems from the work on the front end, trying to dissect it and trying to really investigate where they're at in their financial situation to be able to get to that.
Absolutely.
So tell me this, because a lot of the stuff that we always like to, as realtors, we always like to hear, we always like to know, is the type of trends that are happening within applications. So are you seeing a bigger influx in applications in today's market compared to last year?
Man, I'm getting the same, around the same. You kind of have your normal months, for me, usually, that December, January, February. But, then again, you have, kind of like, hey, we don't ever get snow in this month, but why are we getting snow now? And it's, just like December, we closed, right around 5 million. And December is usually like, a few million. But then, this January and February kind of slowed down. You do tend to see, and I don't know why this is with the market. I still haven't figured it out. You do see, lesser quality of credit coming through during those months. And it could be that it's just more of a deception than anything, because the app count is down. You're just maybe hyper focusing on that.
Okay.
And when you have quite a few apps, you're kind of more, you see the better credit. And
do you find as though like that's a good trend to follow to figure out how the market's doing?
you were asking about applications and being
yeah.
down. That's right. Yeah. Yeah, it definitely depends on the time of year. And it kind of goes back to that grinding mindset. If I see my app count, even though I know, January is generally slow, I start calling on realtors and, just really trying to hustle that next deal and bring it in. But, I've always said to people, look, our world is nothing but a big piece of pie, just like real estate and more. There's a huge pie for that, right? It's just how hard do you want to work to keep your piece of the pie?
Yeah.
Do you want a bigger piece?
Yeah.
Do you want a smaller piece? And you really just have to adjust to that, and find out what you want out of it.
That's
because look, there's guys that are in lending that say, I only want to work 20 hours a week, and that's their goal. Like, I want to spend more time with the fam or whatever it is. Everybody has their goals, and not everybody wants to go work till 9 o'clock at night and crank it out.
For sure. For sure. So, within the real estate industry, I feel like we've had a lot of changes and a lot of regulations that have happened within the last few years, especially last year, with everything that went on with the NAR. Is there anything big that's kind of come into the lending side of the industry that has maybe give you guys a little bit of a harder time or a change that you had to let people know about?
No, the thing is, people get really, really hyper focused on rate.
Mm-hmm.
I've never bought a house based on interest rate ever. At the end of the day, I'm a home buyer. I build equity. I always say there's two people that shouldn't buy a house, and that's if they don't qualify at the time, or if they're in an area very short term, right? If I'm just here on work for a year, unless I want a rental property, it's probably best I just rent. You're not necessarily throwing the money away in that sense. Some of these military guys that move here, they're only going to be here maybe a year. 3 years or longer is good. Go ahead and invest in a house. But, when you're in that area short term, but, I always say a good time to buy is when you're ready to buy, So if someone says, well, hey, Blake, should I buy a house or should I not buy a house? Well, do you need a house? Because if you don't need a house, if you're comfortable where you're at, it fits your family just fine,
Mm-hmm.
and maybe you're just trying to keep up with the Jones, it's probably not a good time to buy, right? Rates are up. But, a good time to buy is when you truly need to buy. The rates are going to do what they do. But I always say this, look, if rates are up, guess what else is up? Rent's up, right? These investors aren't, they're paying the higher rates too, right?
Yeah.
And it trends with the market. So, at the end of the day, if you're a home buyer, you're always building equity in something, no matter what the rates are doing. So you're always buying. Because the flip side to that is okay, for example, if someone says to me, well, Blake, I'm going to wait until the rates go down. Okay. So what you're really saying in that sentence is, I'm going to go ahead and just continue to pay the extra money towards rent, which means I'm not building equity at a house, right? Or on a house. So then when I go, down the road from there, when you go buy that house, right, you're building equity in it. And when the rates go down, you refinance. So now you got your lower payment and your equity, right?
Yeah.
Whereas, okay, if we just throw money away in the rent and go, okay, well, I'll wait until the rates go down. So the flip side is that is they now go buy, which means they're going to pay more for that house a year or two later.
Exactly.
Right? Have zero equity. And they got the payment they want, but you're better off on the flip side of that.
Yeah.
Right?
Yeah. I think that's a huge part that people are forgetting about, or they're just not educated on, is that, yes, the rates are higher right now. So, if you're trying to buy a $200,000 house at a 6.5% rate, yes, you're going to be paying a lot more in that rate.
Yeah.
But on the other end, if you go ahead and buy that same house, is no longer $200,000.
Correct.
Now we're talking about more like 220, 230.
Yeah.
And even if they do come down to a number that we probably won't ever see again, like a 4.5.
Or you'll hear him even say, you'll hear him say, oh, I'm going to wait until the prices go down. Well, we'll be waiting forever.
Yeah,
right?
absolutely.
The thing is, prices don't go down. It's a common deception in their brain, because the thing is, when the market was booming in 21, people were overpaying, right?
Yep.
Okay, well, where people get that common deception is when the market does slow, there's a little bit more breathing room right there, right? So like, for example, they have a house listed at 230, but hey, I can go get it for say 225 and they'll pay closing cost or 220 even maybe, right?
Yeah.
So they're thinking, oh, well, I'm getting that house cheaper. No, you're still paying overall more for it than you would have a year or two ago,
Yep.
right? And so that's a common misconception too. You know, at the end of the day, you're either a home buyer or you're a renter.
Mm-hmm.
If you're in an area, you're not going anywhere, you're establishing your career, maybe you're not in college, you've got your career going, you shouldn't be renting.
Absolutely.
You should be building equity into a home.
Yeah, building the equity, especially for the fact that what's the national rate for the values of homes is what is like 4% of year over year.
Correct.
And that's even on the low end now compared to what the last 4 or 5 years that we've had.
Well, and it kind of goes back to what we were saying earlier.
But it's going back to that. It's going
True.
now. We're getting back to that 4%.
Yeah.
We're still having that trajectory. Yeah. Now it's just slowing down. It's a slower pace. So it's leveling out a little bit. Everybody thinks that because it's leveling out, it's going to drop. And that's where
it runs in cycles. Again, going back to what we were saying, when the economy's, booming, everybody's spending money, right?
Mm-hmm.
Rates go up and rates go down, right? It's a simple supply and demand type deal, and so when rates are up, people again stop spending as much money, but they more or less run in cycles,
Mm-hmm.
and so, but when that slows down, and the economy starts to come to a crawl, because the rates can't stay up for too long, just like they can't stay down for too long.
Yeah.
Either way, in those situations, the economy comes to a crawl. And when it comes to a crawl, we're in a bona fide crash, right? We don't want that. That's why the feds jumped in and started jumping the interest rates, because had they not gotten their nose involved, what would have happened was the values would have kept gaining equity at breakneck speeds. And it gets to a point where your average middle class people can't afford a house.
Yeah.
And if they can't afford a house, it's coming to a crawl. Next thing you know, people are dumping houses, selling them for less, and then we've got negative equity, and that's a crash.
That's basically a crash. Yeah. And what's the likelihood, in your opinion, what's the likelihood of that happening again?
Man, the thing is, you had a lot of factors that played into that crash. You had just really terrible lending laws. I mean, back then, seriously, anybody and everybody could get a loan. And you can't let a major core industry just run wild, right? Because the thing is, people will take advantage of that. People take advantage of loopholes. It's in our nature. We're always trying to find the
easy way out,
cheat code, right? Yep. And so people will take advantage of that. And so you had a lot of factors that played into that, but mainly very bad lending laws. The main thing that they passed, and I will say it, because look, people, for the most part, when they're making money, they're going to pay their bills, right?
Mm-hmm.
And most people, they're only going to not pay their bills when they're in a bad spot. Maybe they lost their job, whatever. It's not so much the credit score, it's whether they can afford a house or not, right? Mm-hmm. And so in 2011, I believe it was, that's when they came in and said, all right, we're rehauling the mortgage industry. It was full swing after the crash, because it was 2008, 9, it was full swing 2010, 11. The feds come in and said, all right, we've got to make some, if the feds bailed the industry out, they're like, all right, you're living back at mom and daddy's house. We're going to play by our rules, right?
Yeah.
And so probably one of the main things that they passed was the Ability to Repay Act, which said, okay, you have to prove that this borrower can afford this house. Back then it was the Wild West. You could do stated income loans, which means the borrower can just state what their income is. You had what they called NINA, which was no income, no assets. They didn't have to prove a thing.
That's crazy to think about.
Yeah.
I mean, being in the industry for only 6 years and to think about that type of regulation where you're just like going off of the word of any random person, you know what I mean? And just to be able to, and to still be able to borrow $200,000, $300,000, $400,000 just by saying, yeah, this is how much I earn on paper.
Oh, it got out of control. Well, and the thing is, it gets real dangerous too when you are loaning those 100%, and anybody and everybody can get a loan. You're just flooding the market with purchases, right? Mm-hmm. And at that time, builders were building on a mass scale. Like even here locally, they were, builders had 20 and 30 houses going at a time, and several builders,
Yeah.
And it just got to a point where it hit a wall. But I think the feds, kind of learned their lesson with that sense. And, even going back to COVID with them passing that stimulus money, they probably waited a little too long. They probably cut it a little too close. with hiking the rates, because a lot of people go, why do they hike the rates like that? You would think that'd be counterproductive because, if everybody's already kind of not doing so hot, and then you raise the interest rates, that doesn't help people out. Well, it slows people down.
Yeah.
And more or less, if people aren't blowing as much, in turn, that brings the inflation down. So those higher rates slow people down. So where we're kind of sitting is that midpoint in it. You had, the Fed hikes. So if we go back in time we all know the great rates of 2020, 2021. Of course, we had great rates, in the last 12 years.
Yeah,
we've had
I was
a
going to
lot
say,
of great rates,
go back to
right?
2017.
But,
in my opinion,
again, when they put that much money in the economy and people are blowing that much and it starts to get out of control. So the Feds come in and said, whoa, we've got to start raising these interest rates. So they actually did for 2 straight years up till the end of 23. Of course, all of last year, they kept mentioning, hey, we're going to run some Fed rate cuts, right? So more or less, it was just whispers at that point. And then around, what was it, September, they finally announced and said, all right, inflation's getting closer to where we want it. Let's go ahead and start looking at some cuts. They committed to 3 cuts. We've gotten 1. We've got a few more to go. I think from there, they're going to play it by ear.
Do you think they're going to be doing the same exact thing they did last year?
I think it's going to ride this year. I think we're going to kind of float. I think it'll probably be another good year, before we see them. But, again, everybody gets tied in on interest rate. Interest rates are interest rates. I tell people when they're buying a house right now, because everybody's big struggle is, Blake, man, I've got 3 kids, dude, and everything I really need $1,500 a month, but everything we're finding is like going to cost me $1,750, $1,800, right? As long as they can keep it within what I call striking range of when that refinance boat comes around.
Yeah.
Which, let's just say a $200,000 house, about $1,500 a month with taxes, insurance, everything. If that guy does, push it a little bit to that, say, 1,800, he's definitely, when these rates do come down, and that's playing it not aggressive at all. Let's just say low 5s.
Mm-hmm.
I'm not going to tell people, oh, for sure they're going to go back to the 3s and 4s, right? Even if we put it in low 5s in that guy's scenario, he's back to where he wanted to be, right?
Yeah.
And so, now if that guy says, well, Blake, I found one at 2,300, right? I'm going to have a heart-to-heart with him and let him know, and you're not going to be there. You're really pushing yourself.
Yeah. I mean, you probably could afford it, but at the same time, you're going to be house broke.
You want to, right? You're
going to be house broke. Exactly. Yeah. I mean, I think a lot of it goes back to, kind of what you were saying before is stop worrying about the rate as much as far as does the numbers work for you?
Correct.
Do the numbers work for you? Will this house gain you equity? Is it a good investment to even then not be thinking about, especially for those younger ones, to not be thinking of like, this is your forever home.
Yeah.
You know what I mean?
Look at it like buying a car. No matter what, if you need a car, if your car's giving you troubles or issues and you need a car to get to work, no matter what the rates are doing, you got to go get a car, right? Unless you're paying cash for it. It's the same thing with houses, but it runs cycles. I mean, if you look back in history, you're going to see about 3 years with rates up, 3 years with rates down, or you'll see 3 years rates up, 2 years rates down, and then you'll see 3 years rates down, 2 years rates up. Right?
Yeah.
And it's just that constant of our economy's blowing a bunch of money. Here comes the Fed raising the rates, slows everybody down. Everybody chills back out, rates back down, right? And so, again, as long as you can stay, if you're buying on the upper end, there's light at the end of the tunnel. Okay, here in a few years, I can crank this thing out on a refinance, right?
Absolutely.
And really getting past that first year, because most people are going to gradually see increases in their pay, right?
Yeah.
Normal job raises, so it starts even itself out, and
and a lot of time I feel like they get a little bit more of the courage and the drive to work a little bit harder. Who knows? They might have more ambitions when that time comes, especially for the fact that now they own their own home.
But again, the only alternative is renting, which again, you're throwing more money away at rent than you are with purchasing. But, building that equity is so important, man, because, it goes back to what we said earlier. People go through stuff in life.
Yeah.
You're building equity in a house, man. I tell people like that is one of your best security nets, right? Probably the most underutilized tool in the mortgage industry is a home equity line of credit.
Yes,
anybody that has equity in a home, don't hit the panic button when you're in the panic.
Yeah.
People that have equity in their home, I'm like, man, set up a line of credit. It's super cheap to set it up. It just sits there. You're not paying anything on it. But man, if you have a life snag where you need a quick 10 grand, you're literally just calling the bank at that point or the lender and saying, hey, I need that 10 grand dump. It's already set up. It's there.
I just had this conversation about 3 weeks ago with a client. They were running into an issue, but I knew they had a whole bunch of equity in their house. They had, I mean, they put a good 30 or 40,000 into the house. So that ended up giving them another like $150,000 worth of equity in their house. Correct. And I was like, brother, you have a whole bunch of equity in here right now, you know, because they're wanting to go ahead and be like, oh, I think I need to sell my house to go ahead and pay off this, pay for that.
Absolutely.
Like, no, like you have a good amount of money saved up.
So I get this a lot. Oh no, you're absolutely right, man. I get a lot of this too. Like, Blake, man, we're selling our house. We've got this 100 grand, but man, it's so hard for me to let it go and dump in this house. Like, what if everybody's so scared of, man, what if something happens that I don't have near as much money in the bank? You know, again, because the economy's getting tighter, people want to store them nuts, right? And I'm like, Bob, look, you got good credit, right? Put the 100 grand down, but as soon as we close this thing, we're going to get you a HELOC set up, right? And then you know you have it. And it's there if the emergency's there. Yeah. Instead of not putting the money down, because then you're just paying extra interest for maybe an emergency situation. Yeah. If that emergency situation rise 2 years down the road, it's already set up. It's there. You can draw down on it.
Absolutely.
Now, you got to be honest with yourself too. So you get, you know, like if you've got somebody that can be honest with themselves, you know, when I say that, I'm talking like, you know, you can tell everybody else like, man, the reason I'm not losing weight, I don't know, it's crazy. But, you know, deep down, you've been sneaking them Oreos at night, right? You know, you truly got to be honest with yourself. So I always joke and say, like, you know, be honest with yourself. You know, maybe a HELOC's not the greatest tool for the guy that says, hey, let's go to Vegas and just throw it on the HELOC.
Oh, my
right?
God,
yeah. So it's not for everybody.
True that.
You know, and again, that's kind of me kind of dissecting and seeing how they are with their money. And, you know, people that are, you know, they're good with their money. It's a great financial tool.
Oh, absolutely, man. Yeah, I think it's a great tool to have, and I'm glad you brought it up because I love a good HELOC, man, especially especially on, you know, on the side of investments. You know what I mean? To be able to use that towards investments. You've already got an investment. A lot of people that don't understand that the equity you have in your personal home, that's some investment money you can use towards something that, especially for those that want to have something bigger, if they want to start a business, if they want to go into, you know, getting other rental properties and investing into that side of things. It's a huge tool to be able to use, and it's not talked about it as much because I don't know how new or how old this process and system is, but I mean, me just learning about it within the last four or 5 years, it's been an amazing tool that I've been able to help other people and myself.
Oh, absolutely, yeah. There's so many different ways you can skin it, you know, and especially like, let's say I've got a young guy, Blake, I want to get into investment properties, but man, 20% is a chunk, dude. Yeah. And he's right. It is. I mean, look, even if you take $400,000 properties and you're putting 20% down a pop, plus you got a little bit of closing. I mean, that's $100,000 just for $400,000 properties, right? So a great way for a person to get in is owner occupied. You know, let's say they start out buying a $200,000 house. A year later, hey, let's rent that one out and buy another one, right? Yeah. So you're not killing the cow with the down payment.
And you can get up to a fourplex. Yeah. You can get up to a fourplex.
I even teach people, like, when you get that first rental property, like that first stage, you're renting this one out, you're going to this one, right? That first property, set up a whole separate account. We're taking that first month's deposit and we're throwing it in that account, right? So let's say it's $1,500 they're throwing in there. And then from there, you know, let's say their margin, because your margin starting out, which is your profit on your house per month, is going to be a lot lower starting out than it is 10 years down the road, right? Because you're going to go up every few years in rent. So let's just say that it's at the lowest margin. Let's go 300 on this particular property because he didn't put a lot down, right? You know, that first 8 months, I tell them you should take that margin and throw it in that account. So now we've got about $5,000 in that account with that deposit money. Yes. Because a lot of people are so afraid to get in it because, like, well, Blake, what if something goes wrong, man? Well, anything major you have insurance for. But if you've got that nest egg in that first 8 months, especially, you know, if the guy calls and says, hey, look, the dishwasher crapped the bed, right? Yep. Well, they're paying for it. They just don't know it, right? Yeah. But from that point on, you know, throwing it all back towards the principal, right? Absolutely. And it depends. I mean, most people, you know, they're not getting into investment properties to get rich off the margins. They're trying to get it paid for to have that investment paid for. Right?
That's right.
But, you know, you do get a few here and there. I've got a guy out of Seattle that he scoops up quite a few around here. He's just, kind of miserable with his job, and he's trying to get enough cash flow on his rental properties to where he can just kind of peel away from his job. So
Oh yeah.
he's going ahead and pulling the margins now.
Man, it's amazing how I know a bunch of different investors, and they all have their own reasons on why they have investments, and their own reasons on why they capped out on the amount of rentals that they have.
Yeah.
You know, I've got a friend of mine out of Florida that he has about 10 rental properties right now. He's in his 50s, but he's retired, and he's like, this right here puts enough in my pocket every month.
Correct.
That I don't have to do anything. I don't have to worry about it. I just, every once in a while, I go to maintain, I check up on the tenants, and I'm good there. I've got another friend has over 130 properties,
Correct.
130 doors, and their thing is property management. Like, that's their business, is property management.
A lot of people, man, when they look at that, they're like, you know, if you look at, like, you're talking to someone with, let's say, 100 properties, you can't even imagine, like, how do they even get there? You know, it's like the losing the weight. When you tell someone you got to lose 100 pounds, or they know they need to lose 100 pounds, it's so hard for them to fathom it. Or just like I was talking about credit earlier, it's so hard for them to imagine, like, man, this is going to take forever to fix my credit. Look, it's one step at a time. That's exactly how they got there. You just got to jump off and do it one step at a time, just like working out one day at a time. We're not worried about 3 months, 6 months down. We're worried about today.
Yeah.
You know, what are we doing today? Right?
That's right.
Yeah.
So, man, you work with a lot of different agents. You know, you're always on the grind. You know, what's your daily routine for, like, staying productive?
You know, really, it's just like anything, you know, the one step at a time type deal. You know, my daily routine, you know, I'm not a super early person at the office. You know, when I work till 9 o'clock at night, I'm not trying to get up there at 7 o'clock in the morning.
What time do you get in?
Usually around that 9:30 mark, you know, sometimes even 10, to be honest with you. But I don't do lunch breaks. And then again, I'm there till 9 o'clock at night. You know, the thing about it is, like, no matter if I get in, you know, and I've tried different schedules, different things. You know, I'd get up there at 7 o'clock in the morning. Guess what? Still there till 9. Because the thing is, man, is when I get in, my phone's blowing up so much and so many things are happening. And you're really just, you know, kind of bouncing from one thing to the next. And then you've got your assistant and your processor coming in saying, hey, this is the hot thing of the moment. Or then we got a fire going off, you know, at a closing, or whatever the case is. You know, you're just constantly kind of battling that all day. So finally, around that 5 o'clock time, you know, most people aren't calling my phone. You know, they're getting home from work, spending time with the fam, what have you. I've got that moment of like literally at 5 o'clock every day, I'm just like, oh my gosh. And then I can literally sit and look at my list and, like, truly think, like, okay, this is where I need to go next. You know what I mean?
Gotcha. Yeah.
And that's the hardest part of my day, really, is just the juggle of, because like I said, I'll be on a call and I'll have 10 texts backed up, and it's like, and then someone's calling you, going, I need your attention now, or I need you now, you know, but you've got to almost kind of hurry up and figure out really quick, like, what's the next hot thing I need to jump to? And sometimes you're jumping to something and dealing with something that's not so hot, that other things need your attention, you know? So, like I said, it doesn't help being a little bit ADD, you know, and I don't know if it's, you know,
or maybe it does.
Well, it might, you never know. You never know. I mean, it takes all kinds, right? But I will say that, you know, my wife and my assistant, they do a really good job of, you know, it's funny because my assistant, she's my, she'll be my niece-in-law, I guess. She's my nephew's soon-to-be wife, right? And so she's been with me, I think, a little over a year now. But see, when she first joined me, she was so afraid to come in there and be forceful at all. Well, see, my wife's not, right? She, you know, she'll come in there and be like, no, this is what we're doing, you know? So she's gotten a little bit better about that. Like, I need you. This is what you're doing next.
So she's
learning
she'll
from you guys. She'll come in and throw something on my desk and go, when you get off this call, because she'll hurry up and she'll be yelling in the office going, are you already on another call? And I'm already dialing another call because she hears me get off, and then she was like, dang it, you know?
Yeah.
So then she'll come in and be forceful to get my attention, especially when it's something important. You know?
But she knows how you work, and she knows that that's what it takes.
Yeah.
To
Which
get
it doesn't
it
bother
done.
me.
Yeah, right.
If they get
It's just
forceful, it doesn't bother me.
That's the way y'all
I need
communicate.
them,
Yeah,
you know,
exactly. That's the reason why you have them there.
Yeah,
Right. Absolutely
absolutely.
right. And that's why you guys work together so well. Most definitely. So you, like I said, you work with a lot of agents. You know, what's something that you would tell agents right now in this market today, especially since the fact that we got spoiled for the last,
Correct.
3.5 years, 4 years. Now we're going into what's known as a regular market, in my opinion, with a different type of economy that we have. What would you tell them right now to get them to understand and to not give up when it comes to this. And if they're going through a hard time when it comes to their business, what would you tell them
That's
right
actually
now?
a great question. More than anything, you know, if you look at just like the Cabot area, all your consumers out there are relying on the professionals in their market. They're relying on me's and you's and all these realtors and lenders, whether it's me or you or any other lender realtor combo. They're relying on that, right? And more than anything, when I talk to my agents, guys, keep it positive. If you're over there complaining about the rates, they're going to hear that and then be like, man, we shouldn't buy. I heard her complain about the rates or talking about the rates. The rates are too high. Look, it's always a good time to buy.
Yes.
Again, I mean, you're always investing in real estate, right? And again, there's a few scenarios where people don't. And I think around here, I think realtors do a good job of truly telling somebody you probably shouldn't buy. If you're only here short term, you shouldn't buy, right? But just keeping it positive and realizing, hey, historically the rates aren't bad. Rates go up and rates go down. People need to buy houses. Why not now, right?
Yes.
And just keep it positive. And when it's being positive with the lending and with the realtors, that trickles out into, because again, you're at church. All these people that you're dealing with aren't just, people you're doing business with. These are people You're going to church with them, you're school, whatever, work, you're showing up.
The community,
different places,
the
community, yes. And they overhear a lot of that stuff. And you just got to keep it positive and keep that morale up and realize it's always a good time to buy, man.
How do you battle the news outlets when that type of information comes out and you have a client that comes to you and said, oh, I just saw on CNN, they're saying that it's going to go up another 0.5%. But like, then trying to get them back to like understanding the same topic of like, don't concentrate on that. That's
correct.
Yes. Even if it's true that the rate might go up or the rate might come down, don't concentrate on that. Does it work for you?
I was telling somebody the other day, dude, you see, especially I'm entrenched. I know finance like the back of my hand. It's so crazy. You start realizing how much disinformation gets thrown out there.
Yes.
And how many times it's really just some guy that works at a media outlet and he's like just throwing some BS type.
Or it's somebody else that gave them the information
correct.
That's just putting it on the teleprompter.
And it does. It causes fear sometimes. And, again, at the end of the day, you can't get so caught up, in all this stuff. Like just stay in your lane, do your thing one step at a time. Rates go up, rates go down. Again, you buy because you need a house, right? We need to buy a house. We've outgrown it. Whatever the situation is, hey, I'm tired of living in the city. I want to live out in the country, right? Or, hey, we just got moved to the area, ready to buy a house, right? You just can't get caught up in that. But more than anything, just keep that morale up. Keep, just letting everybody know, like it's going to be okay.
Yeah.
Dude, this isn't really even a storm. All it is, the only thing that happened was it was booming. And yeah, of course it's got to slow down at some point.
Yes.
And sure, it slowed down, but again, how much of that piece of the pie do you want? You just got to work a little bit harder, right?
Man, I'll tell you this, like if it weren't for the fact that, rates are being so, if rates are being so impactful that it's a bad time for people to buy, we wouldn't have any business.
Correct.
You know what I mean? So like,
well, when I got into it up until the market crash, dude, I would be stoked if I was locking somebody in at 6.99%.
Yeah.
It was rare. I mean, I was like, holy cow.
Yeah.
There was a lot of loan. Hell, subprime was around. There was rates at 10, 11%.
Exactly.
8,
and a
9%.
lot of the people nowadays don't even know about that.
Correct. Because we've got this newer, younger generation going on. And so, more or less, if you look at sixes historically, it's really not bad at all. Heck, the 80s, 90s, it was unheard of to even get 12, 13. It was like 14, 15%,
right.
So it's not bad money. Again, you just buy, but the main thing I tell people is do not sleep past the refinance period. You ain't got to be a hawk about it, but you take all this time to get on YouTube or TikTok or whatever it is. It takes 2 seconds to Google what's the average interest rates, or call me or text me. Everybody I'm closing right now, I'm like, look, you should be texting me every 3 months going, hey, Blake, what's rates doing?
Yeah.
And I'm going to say, hey, keep hanging tight, or hey, let's nail it. It's time to refinance.
That's right. Absolutely.
Just keep that morale up, man.
Absolutely,
keep that morale.
man.
Talk positive. We're not talking negative, right?
That's the big thing. And we've said this a bunch of times before, and right here on the podcast with a few of our agents, and it's almost, taking control of the outlet a little bit. You know what I mean? Taking control of what's really happening in our market. Because again, we can't talk about what's happening in, at least for us as real estate agents, we can't talk about what's happening in Northwest Arkansas with the market up there. That's not our market. We don't understand that place. We can't tell you what's going on in Missouri, out in Oklahoma, out in Texas, unless we are in communications and we practice there. But for the most part, the average agent here practices in Central Arkansas. I can tell you everything about what the Central Arkansas market will show you like the back of my hand because I know it.
Yeah.
But I'm not going to sit here and tell you that, whatever is happening in Northwest Arkansas is affecting us here, because it's not. That's a whole different market up there. And not only just from obvious reasons, but also in the figures as well too. The market tells you exactly what's going on.
No, absolutely. Yeah, market does what it wants to do for sure. But the one great thing we have for us here is the military base.
Yes.
100%. It's a constant supply of people coming in and leaving. And that's a huge help too.
Man, that's 70% of my business right there.
Correct.
Is all military. And yes, it's amazing. I mean, we come from the military. So like my wife's in the military, so we understand what's going on, and we understand the PCS process and stuff like that.
Yeah,
so
I do a lot of VA loans.
It's great, but we get to be a service to them as well too, because now with that, we've gained the knowledge of being able to let them know all the benefits that come along with being a VA buyer, and all the benefits that come along with being in the military here in Central Arkansas, and all the benefits that it comes along with purchasing a home here in like the Cabot, Jacksonville, Sherwood, BB area, this whole Central Arkansas area. And the knowledge all that knowledge pertained within like the last 6 years now culminates, and now we can share that with everybody. You know what I mean? And so like not nobody's feeling like they're either getting left out or they're getting the short end of a stick when it comes to buying a house.
Yeah.
You know what I mean? We can show them the benefits and show them that this will work, and especially with the trajectory that's going with these markets, let's go ahead and get you some equity. So that way, even if this isn't your last base, even if this is your first base, I wouldn't say first base. Let me take that back, because those are usually the younger crowd. But even if this isn't your last base, build some equity here, take that on, and go into another house that you want to be, especially where most of the time people will either go to their a base that they are looking forward to going to after this, or they're retiring and going back home. So why not? If you're going into an area that you're going to spend more time in, that you might even retire from later on, go ahead and take this equity and get your forever home.
No, absolutely. That's probably one of the most common questions I get too, is like, Blake, what's a good deal or a bad deal? And I say, a good deal is doing what the market's doing at that time. For example, everybody was in 2020 and 2021, everybody was paying over sell price for the most part, or at least bidding over sell price, right? And so more or less, if you were getting a house at market value, I mean, it wasn't a bad deal, right? Now, if we go to today's market, right? It's not too challenging to get a seller to pick up closing cost. You might get a little bit off plus a little bit of closing costs, correct? And so now if you're that person that's, paying over sales price and everybody else is getting their closing costs paid, you probably didn't get a great deal, right?
Yeah.
So really a good deal is more or less, just what the market's doing at the time. Are you getting what everybody else is getting in the market?
Yeah,
right?
and not only that, but having a good negotiator as well too. Being able to have some negotiation, and I think that's where a lot of things are changing back to right now, which a lot of agents aren't used to, is the negotiation side. Is the worst thing you can get is a no. But let's see how everybody can be happy. You know what I mean? Instead of just getting the no and then giving up, say, okay, that didn't work. All right, what about now? How about if what's more important to your people? I'll tell you what's more important to my people, and we'll kind of come to meet in the middle, so we can get something that makes everybody happy and make this deal work where it makes sense at the same time. So I think it's having that ability to negotiate. And to me, man, I feel like that's half the fun. That's half the fun, because then I get to communicate with somebody else. And then a lot of the time, whenever I go in with that type of I guess, attitude or mood, of like, let's find something to make this work, the other agent is a lot of time very receptive. They're very receptive, and it's almost they're appreciative of it. It's not bumping heads. What I mean?
It's a team effort, man.
Exactly. So I think that's a lovely part about it.
Yeah. I mean, we're all working together for one common goal. You got your lender, your title company, you got your appraisers, you got realtors on both sides, you got buyers, you got sellers. At the end of the day, everybody just wants to close and be happy. Right?
Yes.
Let's just make it all merry.
If we can do it together in a good atmosphere, why not? Even better.
Well, that's one thing I've also done different. I know a lot of times in lending, lenders just kind of ignore that listing agent. on each and every deal, I even kind of get an okay on the front end, to make sure, because some buyer's agent really don't want me communicating with them, and you get that. But for the most part, they're like, yeah, you're taking a lot of work off my plate. Because the thing is, if they have an issue, they're blowing you up to blow me up, and then it's just making one big circle. I'd rather just answer my phone call, and not only that, it makes deals run so much smoother because they're getting it from my mouth.
Right.
It's not hearsay at that point. And not only that, I'm letting them, like, look, we're okay. Because most agents are panicking because, especially on a listing side, because they're not talking to the lender, and they're like, any little thing they think, oh my God, the deal's falling through.
Yeah.
And I'm there to tell them, no, we're fine. It's just a timing thing. This got delayed or whatever.
Right.
We're all
Right.
good,
I think that communication is amazing.
Absolutely.
And on top of that, I think the listing agent should be talking to lender anyways, because they're vetting for that. Not only is that buyer's agent vetting for that buyer, but the listing agent is vetting for that buyer as well too, for their client.
Yeah.
So why not? Why not?
And it does. It takes the pressure off my buyer's agent too.
Yeah.
Because they're like, more or less, they're having to come to me anyway.
Right on.
And
right on.
But, like I said, I've got a few that don't prefer it that way. And I think, just in the past, maybe they've been burnt, maybe a lender give TMI, so you got to there is a fine line you walk.
Absolutely.
There's not anything on the bar's personal information or anything like that you portray. You're just, it's strictly about the process of the deal.
Exactly.
And if there's a holdup, if there's not a holdup, everything's running smooth. But yeah, usually on mine, I loop around on a deal and throughout a deal. So I have an app set up for my realtors where they're live speed notified on everything. And then usually once a week, there's a call that's going out. But we also include that listing agent as well.
Oh, good deal.
Yeah. So that way everybody, matter of fact, I was talking to a realtor the other day and she's like, man, since we've been working together, like I don't ever get calls from listing agents anymore. She's like, they used to just blow my phone up and, just kind of almost to a harassing point sometimes. Cause you do get some that are just like,
they're
worried. So worried about that, deal not closing that they're almost just, going a little overboard,
Yeah.
But you just got to talk them off the ledge.
Absolutely, man. Absolutely, man. All right. So what's something that you would like to leave the public with if they're a realtor, if they're a lender, or if they're a client? What's something you want to leave people knowing either about you or just in general?
Yeah, I mean, if you're talking, from a realtor, like I said, what we said earlier, just keep that positive attitude. Again, it's always a good time to buy. There's always going to be somebody that needs a house, right? And why not it be you that they're working with? So just keep that positive, mental attitude and just keep putting that one foot in front of the other. And, like I said, it helps too with the people that you're around. It's hard to frown around somebody that's smiling, man.
Yeah.
You know what I mean? It is. Yeah. My dad's that way. Anytime we, are just kind of in a damper mood, he walks in, and he's laughing and carrying on, it's hard to be down around him, so you almost can't,
Yeah.
Even sometimes you want to still be down, you're like, mad about something and you just can't do it, but, as far as, the public, like I said, don't buy into so much, especially in today's world. We've got the social media right in our face. Everybody's got an opinion. The best advice, just kind of stay in your lane and more or less, if you need an electrician, you call an electrician. If you're looking at doing a mortgage, you call your mortgage professional. Same thing with real estate. You call your realtor. You get the advice from them, not from some vlog or whatever.
Amen. Because they're doing a very generic situation, and it's most of the time it's in a negative manner.
Well, and even when you're watching like some of these podcasts and everything going on here, they're over there talking about a market that's in New York, or like you said earlier, they're talking about a whole different market zone. And the thing is, even with lending, there's different lending guidelines in different areas, and there's different loan to value restrictions and different ways of doing things. Like here in Cabot, we don't have hardly any condos, right?
Yep.
But you go to Florida, that's pretty much all they have.
Yeah, right.
And so it's definitely a different world, but yeah, that's all I'd leave everybody with, man.
Kind of stay in your lane, man. Yeah. Absolutely, brother. But tell them how to find you.
So I've got my cell phone. That's my baby, man. That's what I use mostly. But they can Google me here in Cabot, Flat Branch Home Loans. Everybody has my cell phone. That's 501-413-9119. But I mainly use that good old cell phone, man.
There you
old
go.
School,
Good deal, brother.
They can find us they can find us online as well.
Man, I got to thank you so much for being here today. This was an awesome session.
Yeah.
I know we could probably go for a couple more hours if we wanted to. But I know we both got stuff to do, but we got to do this again.
Yeah.
We got to see if we can put this on the books again. I think a lot of people are going to get some really good information out of this one. So there it is. You heard it from Blake Peterson himself. So if you're out there and you're thinking about possibly getting into the process of purchasing a home, get with a professional. All right. Just like Blake said, you're not going to get a plumber to do what an electrician does. You're going to get, the professional to do what they do. So if you need information on how to do that, get with a lender. The only way to really know what the situation is by dissecting and really investigating into your situation. What works for you may not work for somebody else. What works for somebody else may not work for you. So make sure that you are going to the professionals to get the right information. All right. If you found any great information out of this, if you feel as though somebody else can get some great information out of this, go ahead and share it with them. Comment down below, like, subscribe, and follow us for more. And you know what? I think this is going to be one for the books. So I appreciate it. We're going to get a lot of good clips out of this one, brother. Thank you so much, man. All right, guys. Again, my name is Joshua Suarez for Blake Peterson. We are the Edge Realty Podcast. Until next time, we'll catch you on the flip side. Love y'all. Bye. Hey, thank you so much for tuning into today's episode of the Edge Realty Podcast. We hope you found the insights valuable and enjoyed the discussion. If you did, we'd love for you to help us spread the word. Please share this episode with friends, family, and anyone you think might benefit from our content. Your support helps us reach more people and continue bringing you the best real estate insights. Don't forget to engage with us on social media. Follow us on Facebook, Instagram, TikTok, and YouTube to stay updated with our latest episode, behind the scenes content, and more. We love hearing from you, so drop a comment, ask a question, or share your thoughts on what topics you'd like for us to cover on future episodes. And if you haven't already, make sure to subscribe to our podcast, which is now on Spotify, Apple Podcasts, YouTube, and Amazon Music, so you never miss an episode. Thanks for listening and watching. We'll see you next time on the Edge Realty Podcast, where we're dedicated to helping you navigate the world of real estate with confidence and success. Until then, take care and happy house hunting.